Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Pony AI stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 8.2 billion market cap. They're trading at $24 a share, and they have 349 million shares outstanding. Pony AI provides robo-truck services for logistics companies. It also offers robo-taxi services and intelligent driving software solutions. They were founded in 2016, headquartered in China. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Negative free cash flow every single year because they're not generating much revenue. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also negative each year. Revenue is sales for the company, and that can't be negative. That grew a lot from 8 million in 2021 to 68 million in 2022, then up modestly to 72 million in 2023, up 17% to 84 million. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 14 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $9.1 billion. We divide that by 349 million shares. And we get a calculated stock price of $26. They're trading at $24, so they're trading at a 10% discount. It's a buy according to the model. I am assuming they're going to get to positive free cash flow in 2027, positive 1 billion. So they probably need to generate at least 5 billion of revenue to hit that. That's a pretty massive growth. But if they just get one customer, they can easily blow out this target. And the name of that one customer starts with a U and rhymes with goober. If you put $10,000 into this company when they started trading just 3 months ago, you'd be at $18,000 today. An 81% return of 350% total return. An 80% total return of 350% annualized return. So you can see it pretty much traded sideways for the first 2 months. Up until like 2 weeks ago, it really took off. So if you put $10,000 on 11/29, it looks like that's when they started trading. By February 1st, you would have been at pretty much $10,000. But the stock market is a waiting game. If you expect to be rich overnight, you're never going to make money. To summarize, I have them trading at a 10% discount, ranking 4 out of 10. Would I buy it? Probably not, 2 out of 10. Maybe as a long-term play. I do think it's a bit risky. Ratios don't look good, 1 out of 10. We can't look at 3 to the 4 ratios. They have negative equity, which means their liabilities are higher than their assets. Negative earnings, which means their expenses are higher than their revenue, and negative free cash flow. But you can have negative price of sales, so their price of sales is about 100, which is pretty inflated. Financials, 2 out of 10. Their revenue is going up, but it's still pretty much nothing, 84 million, for a public company of this size. Let's take a look at this document. This is from their IPO, because when a company IPOs, they have to give information to the public so investors can decide if they want to buy the stock or not. It looks like the IPO price was $13. ADS, American Depository Shares. Here we go, offering price $13. The commission to the bank, 91 cents. So the proceeds to the company, $12.09. So investors pay $260 million. The bankers get 11.5 million, and the company $248 million. It looks like Goldman, B of A, Deutsche, Watai Securities, and Tiger Brokers were the underwriters. This prospectus is from 11/26/2024. We aim to commercialize our revolutionary autonomous driving technology to deliver safe, sustainable, and accessible mobility to people and businesses around the world. Here's a picture of the robo-taxi, the inside of the robo-taxi, the robo-truck, the Ponytron. It's a great name. Here's more pictures. Pony at a glance. They've obtained all permits, 250 robo-taxis, 190 robo-trucks. They travel 39 million kilometers. They have 220,000 users. Repeat passengers, 70%. Their revenue in the third quarter, 40 million, double last year of 21 million. Cost of revenue, 35 million. So they did have positive gross profit of 4 million. These numbers are in US dollars. 10% gross profit. Last year, they had a gross loss. R&D is 92 million, same as last year. SG&A 24 million, so they have an operating loss of 116 million, a net loss of 94 million, a little better than last year. Revenue up 85% from 21 million to 39 million. Robotaxi revenue went up 900,000. That's in the trailing 9 months. The increase was due to technological service fees from providing AV engineering for a project in South Korea. AV stands for audiovisual. Also a smaller contribution from the rising passenger fares as we expand our public-facing fare-charging robotaxi operations in Tier 1 cities in China, while remaining in the early stage of commercialization. Robotruck services increased 57% from 17 million to 27 million. The increase was driven by increased transportation service fees collected by Scientron. Scientron expanded its footprint with 45 additional robotrucks. Their revenue from licensing and applications increased from 2.9 million to 7.4 million. The increase was driven by an increase of 4.4 million in revenue from value-added technological services as they signed contracts with 7 large-scale customers. Their revenue in 2022 was 68 million, 2023 72 million, and for the trailing 6 months in 2023, 12 million, trailing 6 months of 2024, 24 million. They do have positive gross profit in every time period, but of course they have an operating loss because of R&D and SG&A, mainly R&D. So they have a net loss in every time frame. As of 6/30/2024, 334 million of cash, and their total current assets 557 million, total assets 690 million, liabilities 45 million. Here's their operating cash flow. For the trailing 6 months, they have a cash loss of 59 million. Last year, a cash loss of 63 million. Let's look at the stock on Simply Wall Street. Its market cap 8.2 billion. I want to see the last share price. They usually show the share price and the market cap. I wonder why they don't do it on this stock. Actually, I think they changed their settings, so they don't have the share price on top anymore. So you can see it IPO at around $13, I think in November 2024. It traded sideways over the next 2.5 months. Just the last week, it shot up. It almost doubled in price. It closed at $24 on Friday. They published a press release on Friday announcing robotaxi operations in Guangzhou, China. It was the first and only company to have approval for operations connecting Guangzhou city center to Guangzhou International Airport, as well as the railway station. This rollout follows the service's debut in Beijing, where the company offers commercial robotaxis connecting riders to Dajing International Airport and Beijing South Railway Station. What's next? In addition to robotaxi services, Pony AI is working on self-driving trucking fleets. It became the first company to get approval for robotruck fleet testing on highways connecting major Chinese provinces. As part of the tests, the truck at the front of the caravan had a human safety operator and was followed by a fleet of autonomous vehicles. And the stock is trading 91 times revenue. That means its market cap is 91 times their revenue. Simply Wall Street values the stock at $70. They say it's 66% undervalued. 4 analysts priced this stock at $22. They say it's overvalued. Their revenue was $8 million in 2021. It grew to $68 million in 2022, but was fairly steady over the next couple of years. The forecast for 2025 is 91 million. 2026, 112 million, 2027, 400 million. These numbers are all in US dollars. They did have some debt in 2023. They paid it off. Now they're debt free. Equity was 700 million in 2021. Now it's 649 million. And they have about $500 million of cash on their balance sheet. 40% of the company is owned by the general public, 23% by insiders, 19% by institutions, 12% by public companies, and 5% by venture capital and private equity firms. Chunpeng is the biggest shareholder at 17%, then Toyota, 12%, the Ontario Teachers Pension Fund, 8%, BlackRock, 0.4%, Citadel, 0.14%, and Deutsche, 0.086%. Their employee count is up a little bit from 1,200 in 2022 to 1,400 in 2024. Their ticker trades on the Dusseldorf, Nasdaq, and Börse Stuttgart. So if you want to get a copy of my discounted cash flow model, click on the video in the top right corner.